$400 million that was allocated was to help with premiums and relief, not only for homeowners insurance, but flood insurance subsequently as well too.
Their insurance policy, this was for a new home buyer, did not have lava coverage. So,
Yeah,
yeah, I mean,
we
here
forgot
in Florida,
volcano.
we're worried about hurricanes,
Sounds
but
sounds like a song.
yeah.
The damages from extreme weather was over $92 billion.
If your ratios are tight and you have underestimated that insurance, that can now throw your debt to income ratio higher, and now you might not have a loan. You don't want to discover that.
Regulatory agencies they can pivot
Very good
much
point.
faster.
Good afternoon, everyone. Welcome to today's webinar with A&D Mortgage. Today, we're going to be talking about a very important issue with a very distinguished panel. So we are grateful to have our guest speakers today. So today, we're going to be looking at the issue of kind of the impact of climate change and property insurance. Currently in the mortgage industry, it's been in the news quite a bit. If you read our trade publications, or if you live in any of the heavily impacted states. We're going to focus predominantly on Florida today because that's where most of our speakers are from. But today we're going to be joined by Valerie Saunders, the president of the National Association of Mortgage Brokers, Nathaniel Bittman, sorry, the president of the Florida Association of Mortgage Professionals, and then Danny Black with Sihle Insurance. Again, I'm Carl Holman. I'm the Director of Communications here at A&D Mortgage. A couple quick housekeeping things. If you have questions for the panelists, please feel free to use the Q&A session or section down in your control bar. We have disabled video and audio for our viewers just to keep the recording clean. And it will be undoubtedly the first question I get, but yes, you will be getting a copy of both the presentation and of the recording, usually within about 24 hours. And then we'll also be posting it up on our website and our YouTube channel. So with that, let's talk a little bit about us first. For those people who may not be aware of who A&D Mortgage is, we are one of the top non-QM lenders in the industry. We're also a strong presence in the conventional and government space. We've been in business for close to 20 years, and we're based out of South Florida. So we're going to, as I said, we'll be talking a lot about Florida here. We have a sister company called the Imperial Fund, which securitizes our originated loans onto the capital markets. And as a result, it gives us a lot of flexibility to do our own proprietary underwriting guidelines, particularly with non-QM mortgages. In terms of where we provide service, at this point, we're nationwide. We've pretty much filled out most of the map. We got a couple states left, particularly up in the sort of north mid part of the country. But we're definitely in all of these high impacted states that we'll be talking about, except for Hawaii, which had the fires last year. And then if you are interested in doing business only loans, we can do those in 40 states without requiring any licensing. So with that, let's kind of move over, and I'll introduce our speakers again really quick. Valerie Saunders, president of NAM. Nathan Bittman. Do you go by Nathan, Nathaniel? Which do you prefer?
I do go by Nathaniel. Thank you for asking.
Nathaniel. Okay, great.
I know it's a mouthful, Nathaniel.
President of FAM. Sorry, it's gonna be a giddy day today. And then Danny Black with, I'm gonna mispronounce it.
Sihle.
Sihle Insurance.
Yes,
Sorry,
sir.
I should ask
Yes,
that when we were
No
practicing. Yeah. So let's talk sort of what we're seeing at the national level when it comes to insurance and what's been happening. So, regardless of people's feelings on the science of climate change, it seems to be clear that climate is getting much more impactful. It's definitely hitting the South, the West, between fires and hurricanes and earthquakes and flooding, particularly along the central parts of Mississippi. So we're definitely experiencing it, and in the Northeast, they're getting particularly bad winters that are causing things like roofs to collapse because of the amount of weight of snow. So yeah, so in some cases, in some areas, uh, insurance premiums have doubled, they've tripled, 25% just in a place like Louisiana because of hurricanes and flooding. And as a result, we're not seeing property insurance come down anytime soon. Rental properties, same issue. They're experiencing increases in rent because of the insurance. House flippers are delaying. Um, there are other people who really don't plan on buying the same number of properties as they did last year because the increased rental insurances carry on those rental properties. And again, I mean, we're seeing still that California, Florida, Texas, New York are sort of the top investment states. So it is definitely impacting. So, and then just quick high points: 70% homeowners in Florida are definitely impacted by homeowner insurance issues. California, nationwide, it's just about half. So lucky for those people that don't live in those areas, but that's becoming fewer and fewer. And you're starting to see a lot of outward migration from the impacted states, just because it's becoming more expensive to live in these areas. And I mean, especially with Florida, we've been known as a pretty low income, or not low income, but low cost of living state because of the lack of taxes and other things, but it's being offset by increased property taxes, increased homeowners insurance. And then same thing nationwide, people are trying to avoid moving to these high impact areas. But that's not necessarily something that we should be discouraging. I mean, people still want to live on the coast. But ultimately there's a lot of pushback that we're seeing. So with that, we're going to kind of open this up to we'll touch the Florida issues a little bit deeper in a minute. So I want to open it up to the group first. So I'll ask somebody a question and the rest of you can kind of chime in. So let's start off at the national level again, Valerie. So what are you seeing in terms of the impact of climate change and the risk assessment models that are that property insurance companies are using?
Sure. So basically these models, they're not designed to predict uncertain events, acts of God, as we call them, like natural disasters. They can't predict volcanoes erupting in Hawaii or wildfires in California or Florida. So what winds up happening is the insurers are being forced to increase their premiums so that they can build larger reserves to be able to cover any possible volatility in future payouts. But of course, that's not a sustainable solution because it just causes businesses and consumers to go uninsured because they can't afford the premiums. I was at an event in Sacramento a few weeks ago, and we were having an insurance conversation, and one of the brokers there had mentioned that they had some former customers who were actually paying off their loans just so that they did not have to purchase homeowners insurance, because the cost of insurance was so expensive that it was cheaper to pay their loan off than to have to add those increased costs into their monthly payment and maintain homeowners insurance.
Wow. Yeah.
Interesting. So Danny, let's move over to you for a second. So now that we're seeing, sort of more and more disasters and they're getting more and more severe, what's that doing with the insurance carriers and their ability to, deal with homes and businesses?
Yeah, like Val said, I mean, it's been extremely difficult. I mean, just in 2023 alone, the damages from extreme weather was over $92 billion. So a lot of these carriers, as you've seen, they were highly exposed in those areas. They've been raising premiums. They've been reducing coverage. Those of us that live in Florida, California, Texas, Louisiana, we all know that. We've seen it. And so, the big cause, the key reasons, right, that they're increasing the premiums, obviously all the catastrophes. We've got historic increases in construction costs that's outpaced inflation. They're seeing higher repair cost, shrinking margins for the insurance carriers, and more frequent severe weather. So, also in California, Florida, and Louisiana, some of the hardest hit when it comes to wildfires, flooding, and hurricanes, they've had their premiums suppressed for years. So over the last few years, obviously they've had to increase. So the good news is, though, that we've started to see, due to recent regulation in Florida specifically, we're starting to see more carriers come into the market, which is fantastic. They're starting to create more competition. We're actually starting to see prices go down a little bit in some. So that's great news.
Good. Yeah. So in that case, Valerie, what do you think in terms of how the insurance companies are responding, particularly to climate change, is that it's impacting the overall mortgage industry? I'm sure you've had this discussion at all these different panels you go to.
Well, I mean, obviously it's causing insurance premiums to increase, which ultimately causes fewer borrowers to be able to qualify. In one of those panels we were talking, and somebody had mentioned that by 2040, they anticipated insurance premiums to increase by 60%.
Wow.
And that's, once again, just not sustainable.
No.
For a regardless of a potential new home buyer. It's probably not sustainable for a current homeowner at this rate, but it's whether or not income can keep pace with higher property values and higher escrow payments.
Let's see. I think we just talked about what changes in the property insurance coverage. Brokers.
Yeah.
What do you expect the brokers are going to be dealing with as they deal more and more with homeowners?
Well, I think what's going to wind up, or what is probably happening, I know it is happening already, is they're having to really make sure that potential home buyers are doing their due diligence. Don't just look at what your principal and interest payment is. Do some research and see what their potential homeowners insurance premium is going to be. Property taxes is public record, but insurance premiums are not public record. So you've really got to look at the area, maybe create a relationship or build on those relationships that you already have with insurance providers, like, Danny's company. Give him a call. I'm sure he'd be happy to let you know what a potential premium amount may be. See also where the property is located. Is it potentially subject to natural disasters? I was at an event last week, and the person I was with was talking to somebody in Hawaii, and their insurance policy, this was for a new home buyer, did not have lava coverage. So
Sorry, we forgot volcano.
We're worried about hurricanes.
Sounds like a song.
Yeah. So make sure that, people are, when they're getting they're looking at their potential insurance premiums, what other coverages may you have? I mean, obviously flood insurance is the big one, but in Florida and California, we have a lot of wildfires. Florida has just about as many wildfires as California does. So, really making sure that you hold the hand, especially of those first-time home buyers, to make sure that they're as informed as possible, and you're not going to get a call from them a year from now. Why did my payment increase so much? Usually we can look at taxes and see, oh, maybe they didn't file for homestead. But potentially this could be, significantly increased insurance coverage. At that same event in California, there was an insurance agent there, and she had mentioned that, and this is of course auto insurance, we're also here in Florida experiencing significant increases.
Yeah.
She had a customer who missed one payment on her insurance. Now, she did have 2 teenage drivers on her policy. Her premium went to $11,000 a year.
Wow.
just by missing one payment. Like missing one payment on your insurance is exponentially almost worse than missing one mortgage payment.
Or her credit
Yeah.
card. Yeah.
So, you know,
Yeah.
it's really have to look at the big picture and, you know, like I said, really hold people's hands and make sure that they're making appropriate financial decisions.
Okay. So let's try to get away from doom and gloom a little bit. Let's take a look at Florida.
Oh, right.
Please.
That's a little subjective. I don't know where you're going with that. So give you
well,
a
you know,
reprieve on that
but
one.
at least take a look at sort of what, you know, in particular, Nathaniel, you've been with VAMP, trying to help the state address the issue, but we have to have a little more doom and gloom. So can we put up the slide about Florida for a second? And then we can see the light of hope that Nathaniel and the others are bringing. So as we've been talking about Florida, yeah, as Danny mentioned, like some of the biggest property insurers in the country have pulled out of Florida, or they went, or smaller ones went bankrupt. Really during COVID and the lead up to that. And obviously we're a vulnerable market because of tax regulations and sort of the increasing climate risk of you know, hurricanes getting worse and worse. Then Demotech ratings accepted by Fannie and Freddie raised concerns about some of the lower quality insurance that's out there.
Right.
Yeah, Danny, sorry, Nathan, you want to cover this a little bit? And I'll ask you a couple questions about what you guys have been doing on sort of the legislative regulatory front.
Sure. Yeah. Thank you. Appreciate the time. You know, I think that what we need to recognize first and foremost for, you know, for the originator that's direct to consumer is, you know, keep in mind that there is a plan, at least in Florida. I'm sure other states to follow, but there is a plan to work on bringing those premiums down. Some of it really has to do with the insurance that covers the insurance, right? So what people don't know is there's a lot of insurance companies out there, and there's an insurance that backs them up in the event that, you know, they don't have the ability to pay out a certain number of claims. And that's been one of the sort of overarching things Danny might be able to mention, like Lloyd's of London, for instance, which always been sort of a cover to the cover. You know, we're trying to get some of those reinsurers that back up the insurers here in the state. We're trying to make them plentiful so that they can come back, because a lot of these insurers that are coming into the state, there are smaller entities that are coming in, but they're not very well capitalized, which is why you see, you know, the bureaucracies, and you see some of the agencies like Fannie and Freddie putting up certain obstacles and saying, hey, if you're going to have insurance, we have to make sure that you're solvent, you're a well-rated company, and if there was a claim, you could pay it. So these are some of the topics we're looking at. From a regulatory standpoint, I do applaud the state for the work they've done. You know, we here at the Florida Association of Mortgage Professionals put a lot of effort and energy behind our advocacy efforts. And we recently brought on a great individual, Sean Stafford, who's with McGuire and Woods, who's our lobbyist. And he's been working, you know, diligently with a lot of senior lawmakers here in Tallahassee to really get this topic of insurance to be reformed. One of the big things that really happened, which was really a function of last year, is Senate Bill 2A. Senate Bill 2A is packed full of nuts with a lot of items. And one of the big things that 2A does is it really kind of adjusts one-way attorney's fees. And not to get caught up in the weeds on what all of that means is, but where Florida was really victimized with insurance was predominantly from attorney's fees. And a lot of insurance companies didn't want to fight didn't want to fight law firms for claims for roofs that were resulting, you know, as a result of a tropical storm. You'd have an individual that would knock on someone's door and basically convince them that they could get a re-roof done, an entire re-roof done for free without, you know, they could have just replaced a shingle. But not to get too caught up in the weeds in some of those details, but it was really the attorneys that were filing litigations and suits against insurance companies that was creating the first level of pandemic. That was the exodus of insurance companies that were out. So Senate Bill 2A kind of kicks in. There's some regulatory stuff there that people can read about. But the key is that one function alone, the legislature believes that as time progresses, that will soften the stance with some of these insurers to come back in the state. That's a big victory. Recently, House Bill 7073, so House Bill 7073, that's another one that, you know, the Florida legislator put out there. It's a $400 million relief fund that does help for premiums to kind of soften some of the expense and some of the premiums. And part of that 400 million is also being allocated to some flood insurances. So the state has several things that they're doing. In terms of the run rate, the belief from the Florida legislature is we're looking at about 18 months, respectfully, that within 18 months, we should start to see some reprieve in Florida. What I would share with you as an originator to kind of echo Valerie's sentiments is, you really have to look at some of these insurance premiums up front, get your quotes up front. There's other variables, right? There's 4-point inspections, things like that. But
Mhm.
what we do see with some, and I do, Valerie, you might know this on a national level, I do think other states are going to follow with kind of creating some type of relief funds. I think when we look at 18 months from now, if some of these premiums start to soften a little bit, it really actually does increase the value of somebody's home. So if insurance comes down, especially in the area of flood, that has a significant impact. I mean, Florida is, we're all coastline, right? I mean, that's really where everybody wants to be, as close to the water as possible. So as those flood premiums start to come down with some of the work that the state is doing, Senate Bill 2A with that whole one-way attorney's fee piece that was really corrected, we think we'll start to see a reprieve, hopefully within 18 months.
Just to throw out there, so California has done some insurance reform. They did in 2019 prohibit insurers from non-renewing policyholders in declared areas. So that moratorium has been extended every single year. Just like here in Florida, we have Citizens. They created the California Fair Access to Insurance Requirements Plan to basically make sure that if you can't find fire coverage, that you are able to receive some type of coverage. So, states are reacting. The problem is we're on the defensive as opposed to the offensive. So.
Yeah, to add to Valerie's point, you look at even Senate Bill 7028, 7028, the My Safe Florida programs. Those are programs that were instituted to help those that are hurricane victims with some relief as well too. So action is there. I do feel that we are making some progress in some positive areas.
Yay. Little sunlight in the Sunshine State.
We need
Can
it.
you even get an orange with it?
Yeah. Well, I mean, otherwise we're just
Yeah.
talking about 70s disco, Earth, Wind, and Fire. So and lava. Well, add lava in there too.
Yeah.
So and then do we see anything else happening potentially in the national level? I mean, I don't know if we're going to see anything coming out of Congress, if it's going to become an election issue in swing states. Not to get political, just I don't know if we're going to
Glad
see.
I don't have to answer that question because he said
No,
national.
well, no. I don't know.
Is that anxiety laugh or what is that laugh?
No, it's a laugh of the likelihood of anything happening this legislative session probably is in the single digits. We're in an election year.
Yep.
You have a really combative House and Senate. So unfortunately, a lot of bills, there's a lot of really good bills that are out there. Just the likelihood of them passing are fairly low. And unfortunately, just like in Florida, I know Nathaniel mentioned quite a few bills, but the session's over. All of those fall on the floor and they get to start all over again. Well, it's the same thing federally. Our the congressional session ends in December. We get to start all over again in January and try to resubmit all of those bills, hoping that in the next 2 years of the congressional session that they will potentially pass. And, who knows, depending on who gets elected in November. But as far as the National Association of Mortgage Brokers, we do have an initiative that we are supporting the full reauthorization of the National Flood Insurance Program. This program, unfortunately, is another one. They just kind of kicked the can down the road for many years. But we would like it to see that it has some provisions that allow for affordable rates, effective coverage. Also, we would like Congress to adopt a bill that would create sort of a 5-year pilot program where there would be a voucher program where the federal government would be able to provide some sort of assistance to pay flood insurance premiums for those people that meet certain income requirements. Obviously, Nathaniel mentioned Florida. We're basically an island that's kind of stuck to, you know, Georgia and and Alabama.
Alabama.
But you know, not everybody is a millionaire. There are plenty of people who are first-time home buyers, low to moderate income borrowers, who live in flood-prone areas. And that really is an impediment for people to be able to purchase when they also, besides having a high homeowners insurance premium, have to add the additional coverage of flood insurance. So if there is some sort of assistance that can be provided to offset some of that cost of the additional coverage, you know, that would be a huge benefit to, you know, potential home buyers or current homeowners in any state.
Yeah, I do want to add to that, you know, like House Bill 7073, that was the big thing, that $400 million that was allocated was to help with premiums and relief, not only for homeowners insurance, but flood insurance subsequently as well, too. My Safe Florida, I mean, there's programs that are out there. Valerie does bring up a great point, which is one of the challenges is that you got to hit the reset button every year.
Yeah.
Right. The bill is good for the year. The governor will sign that into action. It's sort of like Hometown Heroes. You know, we have a program here that many of you are familiar with, Hometown Heroes, and that program, you know, we'll have that in July 1, but it'll be gone by the end of August. And then again, you have to go back when the next session starts. You'll have to go ahead and put that in the budget. You have to discuss it. You have to vote on it, and the governor would have to sign it. So that is probably one of the impediments and challenges, if there was one, is that some of these great plans that are in motion, they're kind of tailored to the year. You hope they're successful, and the next year when it comes back up in session and it's rediscussed, it'll get approved again with some modifications and positive changes to it.
Also, too, when you're in a situation where you're looking on an annual basis, and hey, June 1, we're just about to hit the start of hurricane season. We don't know what's going to happen natural disaster wise that may cause that budget to have to change.
Right.
Funds may have to shift around. It may, unfortunately, impact other programs to feed something else. So, you know, it's sort of the nature of the legislative beast.
Yeah. And great points. I mean, that's us as professionals, right? We have to stay active so we can keep the ball rolling forward, right? We can't allow it to drop. So very good points.
So Danny, how would you advise, you know, what kind of tips can you offer to clients to understand what's going on and maybe save some money just with their own homeowner insurance policies, whether it's brokers advising home buyers or home buyers themselves?
Right.
It's just
that's a great question. I think the key is obviously keep learning and doing what we're doing today, right? Our industry is constantly changing. We've got an incredible partner in A&D Mortgage to help us sharpen our skills that are, you know, you guys are consistently providing education and seminars to help us become experts in our field. So I think we need to take advantage of that. Secondly, I think, as we've discussed earlier, we've got to help customers understand their risk, where they're living can really affect premiums. We've seen some drastic, you know, on the coastline, some really drastic increases in premiums. So you've got to look at that. Obviously, another way to help is look at your deductible. If you can afford it, increasing your deductible is a relatively simple way to reduce your insurance costs. Just keep in mind that your deductible is subtracted from your claim payout if you do end up having a claim. Check for discounts. Some insurance companies, of course, have reduced rates for, you know, new customers, new homes, monitored home security systems. And the big one is really to look for programs offered by your state or county to help lower costs. In Florida, we've got My Safe Florida Home, which offers free wind mitigation reports to people that they can inspect their homes, and they'll let them know what recommendations they have for them. They can get up to $10,000 in grants to complete these things. So if they tell you, hey, it'd be nice for you to get some hurricane clips or straps, some storm shutters, or impact resistant windows. And, you know, that can really reduce your premium. And then finally, of course, you need to shop around. You need to get either an insurance broker or go to multiple insurance companies and shop. So you can see what the difference in coverage is and what the difference in premium is.
Okay. Nathan, there was a scaling question we kind of alluded to and skipped over a little or danced around it, but with all the challenges the insurance industry is facing, things like changing regulations, all these catastrophic events, what impact are you seeing on the mortgage industry on your side, and how is that impacting things like risk assessment, underwriting, and then sort of just overall market dynamics?
Yeah, I mean, I think that when I think about insurance, to me, it's the last thing people typically want to get, right? So when you look at the residential lending transaction, what I have found over so many years is that consumers tend to mess around with insurance last. They just assume not a big deal. They got quoted out a low rate. Maybe, their loan originator just gave a warm and fuzzy, here's kind of what the numbers are going to look like. Nobody took into consideration, what the 4-point inspection might look like. You've heard a lot, not only on a state level, but on a national level, as Valerie described, there is a big moving piece here. What we have to take into consideration is ratios, right? Debt to income ratio first and foremost. If your ratios are tight and you have underestimated that insurance, that can now throw your debt to income ratio higher, and now you might not have a loan. You don't want to discover that after you've completed an appraisal, you're 3/4 of the way in. So kind of saving insurance to the end of the transaction, that almost really needs to be right out of the rip the first thing. Get that 4-point. And then after that, make sure you're quoting out insurance immediately, especially if you got someone who's on the borderline of those higher ratios. It also can take you from a conventional loan to an FHA, depending on what you're trying to do. So that's component number one. The other thing is as Valerie mentioned, which I think is a really good point, is for people that do not want to escrow their accounts, you might want to take into consideration escrowing your account, because if for some reason you are late on your insurance, that can be a problem. You also don't want to not get your insurance premium in the mail, forget it, and then before you know it, now the lender is doing forced placed insurance on you. So I would definitely say, taking into consideration having an escrow account, where in other cases they may not, would be something I would look at. In terms of catastrophes in the market in the area, of course, just picking on Florida, we've done a lot of work, as Danny mentioned, through MySafe, Florida, through some of the other House bills we've talked about, to really invite more carriers in the state, and not just carriers, because there are people here that can get private insurance. You can get it, but it's not going to be accepted with the bureaucracies, as we mentioned earlier on. So one of the big things we have to take into consideration is when somebody is shopping insurance, if they can get a low cost alternative, we have to make sure that that insurer is properly rated, so it doesn't affect anything from the saleability of a loan. But we do see back office, we do see, lenders, we do see securitizers of loan, we do see servicers. Remember, there's life after death of a loan. So you book a loan, may not be the person you're writing a check to. That servicer is also taken into consideration. Who are you writing up with your policies? What's their rating? Because that's going to be the entity they're probably dealing with if there was something catastrophic, like a hurricane or a fire or whatever the case may be.
Interesting. And this is just a question I've thought of. What recommendations do you have? Because I've seen, especially recently, a few reports where homebuyers just are giving up insurance, period. It's for them, they think it's too expensive. What recommendations do you guys have for those people? Are they just gambling, or?
Well,
You mean
first
like
of
paying
all,
off
if
their
you have a
mortgage?
mortgage, don't
Yeah.
do it.
You gotta have it.
You can't do it. Right. Exactly.
Yeah,
Right.
exactly.
I mean,
That's
it
why I'm
goes
asking,
back
mortgage,
to
no mortgage?
yeah. You have a mortgage. I don't think AD Mortgage wants to have a lot of uninsured properties.
No.
on it.
Yeah, no. I mean, obviously, but I've seen enough reports going out there where
Right.
people are foregoing it just because of the
People
current
that have paid off
recession.
homes
And
and stuff.
That goes
Yeah.
back to what I had mentioned earlier about the,
Yeah.
some folks in California paying their mortgages off purely for the reason to not have to continue to have homeowners insurance coverage. At some point there is a tipping point for every homeowner.
Right.
What do you do? Do you still want to live in this home? Okay, so you have to weigh your options. Maybe it's time to downsize. Maybe you go into a condo where, which that's a whole nother,
Don't go there.
conversation with
Trade-
insurance,
Yeah.
but, you
Trade
know, I
proper-
mean, you have
trade
to,
your property insurance for homeowner association fees.
right, yeah. So
Yeah.
you have to weigh your options out, but, you know, no
Yeah.
insurance probably isn't a good thing.
Yeah.
Right, yeah,
I figured we'd all have the same obvious answer.
yeah.
It just
To that point
I've-
too, Carl, there's been figures out there about 60% of people that should have flood insurance don't have flood insurance. So of course they're counting people that have homes paid off and things like that, but
Mhm.
that's a big number. And if you've been in if you've watched the news lately, you can see the impact that it has on these families. I mean,
Mhm.
it's unbelievable.
You see flooding in places that just you wouldn't even think there'd be
Never,
flooding.
right,
I
exactly.
know, like in our area up here,
Yep.
I'm in the Jacksonville area of Florida, so we're kind of in this like little creek where we're not really threatened by a direct hit. What we're threatened by is storm surge.
Storm surge. Yep.
And the storm surge areas are really hardest hit in the urban core, in the rural, in the low to moderate income borrower locations.
Mhm.
Like Danny said, chances are, unless they have to purchase flood insurance, they're not going to purchase an optional coverage because they just, number one, may not have the financial means, but number two, they just may not be aware.
And you can't even bet anymore on, well, it's been 30 years since there was the last thing. I mean,
Right.
we both live in the same city, and I mean, you remember, Valerie, what was it, 8 years ago, the one that hit downtown, and I mean, it flooded the
Yeah.
hospital up to like 10 feet. It just was bizarre, and it hadn't happened in like 60 years.
Or if you think about even Hurricane Katrina and, when the levees broke,
Whoever would have
the
predicted
biggest
that.
problem there was it hit areas where those people probably did not
Yes.
have homeowners insurance coverage, much less flood insurance coverage.
Yeah.
Right. Right.
Yeah, I do want to emphasize though that I think that we have to kind of work a little bit backwards now.
Mhm.
Let's talk about what can loan officers use. What can you take away
Yeah.
from this? That's a strategy
Yep.
that would help you. First and foremost, what I would say is, certainly for all of you that live in Florida, participate with the FAMP and make sure you are part of our advocacy efforts. We create content for you and provide you legislative bills with wins and victories that you can get in front of your real estate agents. And you could hold lunch and learns, breakfast and learns, seminars where you're
Mhm.
getting in front of your agents and saying, we understand insurance is a conundrum. Here's what the state is doing about it. And parlay that, get an insurance agent to participate and really become the conduit that when you're doing your pre-qualification with your consumer up front, look at the picture on Zillow, see what's going on there, look at the age of the home, learn from the insurance agent and understand how, because insurance can be really the line of demarcation. Somebody could quote insurance at $100 a month. That consumers can be very frustrated when they find out that the premium is really $300 a month. I think as opposed to just winging it on insurance, really coming in with the forethought to be that advocate in that initial buyer's consultation is gonna really put you. It's going to differentiate you from the masses. But what an opportunity to take some of these legislative efforts, team up with an insurance agent, host these lunch and learns, breakfast and
Yep.
learns. It's going to make you look like you really are, you're really plugged into what you're doing. So
Not just that, but I mean, when you're connecting with an insurance agent, like I said, they are a direct resource for you that you can contact them. You can get some estimates of coverage for the area. You can find out, are there other properties in this location that have flood insurance? There are lots of properties all across the country that have certain meandering lines for the flood insurance maps, and your insurance agent is going to be the one to know. But as Nathaniel mentioned, trade associations representing your interests, whether on a state level or nationally, are working diligently to try to not just look at legislation, but also look at things from a regulatory perspective. Whether it is on a state level or a national level, those are actually the paths of least resistance for change. Because when you have a Congress or a legislature on a state level that isn't able to act quick enough, regulatory agencies they can pivot
Very good
much
point.
faster.
Yes.
Yeah.
So
Great point.
Yeah, very good point. And I think both of your points, this industry has been extremely good to all of us, right? And our families. And I think it's our obligation to become very active and very involved to help to continue to protect our industry. So.
Well, I find it often amusing that, a consumer might leave you as a loan originator for an eighth in rate, right? And that could be a $50 payment. But we really don't talk about, well, hold on a minute. Let me help you shop out insurance. Let me help you get the right premium for you. And let me save you $150 in your monthly payment. Right. We really should be turning the conversation around where you become a complete advisor. So, you putting on this presentation, talking about insurance, I find that insurance performed right, educated right, really can separate you as a loan originator from the masses, because people just don't do that. They talk about rate and cost and what's my payment, what's my down payment, and everybody just dismisses insurance until you get into the third week of a loan after you're under contract.
Yeah, and that's a lot of the reason why we do some of these types of webinars. I mean, we've been spending a lot of time this year talking about how brokers can help better educate their borrowers, because you see endless reports of, Gen Z and millennials, who are the next big batch of home buyers, not having the same level of financial literacy that some of the other generations have had. I mean, there have been surveys that when you ask them what's mortgage insurance, they go, oh, that's just an insurance that pays my mortgage if I can't make the payment. I mean, you see some just very strange answers. So, and we've also been talking a lot about the hidden costs. It's not just about, principal and interest. You got to look at, if you choose a condo, homeowners or condo association fees, insurance, your property taxes, all those hidden fees, or just having a savings set aside for, when your air conditioning goes out, just those little things that they wouldn't expect because they're just so focused on, what's my monthly payment going to be. But you got to focus on sort of the overall picture. And that's partly why we wanted to look at the insurance side of it, because it's just not, it's generally not something that's sexy and people don't want to focus on it, but it's a big issue, and it's becoming a big issue when it comes to housing affordability, which is the big issue now.
Well, it's very sexy to Danny.
Yeah, it is sexy for Danny.
I do want to just mention too, it's important as a loan originator. I feel it's really almost your responsibility you've kind of helped this person leading up to obtaining the loan. You also should stay connected post-loan, obviously, for a referral. When those rates come back down to the 2s or 3s and we have a massive refi boom.
You're being recorded.
I know.
Hey, we started
I'll
off
say
with
5s.
You heard it here first from the president of NAM.
But also to guide them for, sustainable housing practices. For example, solar panels. A lot of, my daughter and her husband bought a house a couple years ago, and of course they had somebody that came along that wanted, show them the savings you can have with solar panels. And yes, you can save on your electricity, but some solar panels cost $100,000. And the amount of time it's going to take for you to recoup your money on the savings just isn't going to be there. Plus, a lot of people don't understand PACE financing. Sometimes it's included in your property taxes. Sometimes it's UCC ones. They don't understand that is a separate financing option that is going to have to be paid, or that sometimes doesn't require spousal signature. I have a borrower who is 80 years old. His wife entered into a PACE loan because she wanted the $10,000 savings on her income tax. Remember when they were doing that? And but it's a $350 a month payment that he can't get rid of. Solar panels are $100,000. He's 80 years old. He's never going in his lifetime be able to pay off the solar panels. So, it's about continuing to educate far, beyond just the initial acquisition of the property.
Customer for life.
So, yes.
Yeah.
Yep.
Good point.
Okay, well, we kind of exhausted most of the questions. We've got one comment that one of our viewers said that he had heard of an instance where the force-placed insurance was cheaper than the actual insurance that the homeowner was carrying. What do you guys think about that?
I think that's an anomaly. That's very rare. I wouldn't lean into that. That's a very rare circumstance. But I suppose
If you have a customer that, or a borrower that has high personal property coverage, obviously force-placed insurance isn't looking at your personal property
right, that's
coverage.
a good point.
Right.
It's looking
There's
at your
a couple-
dwelling. So that could be a reason why the force-placed was cheaper. They really need to look at two policies side by side and see if they each have appropriate matching coverage.
Yeah. And that's not going to help future premiums either for them because, right, their credit's going to be messed up from not paying their premium. So that doesn't help the situation either.
All right, let's open it up the floor to questions from our folks. Or is there anything we've sort of overlooked? I think the only thing we haven't talked about are potential sinkholes in Florida, but
We'll get in the weeds in that one, right?
yeah.
I would like to add just kind of maybe a closing remark for me to the group
Yeah.
out there.
Yeah.
I just want to say, we talk about just some of the proactive things that people can do. I do want to say if some of these topics are important to you, like if it's important to you to know some of these legislative things that we're doing, getting involved with your trade association, certainly for those of you in Florida, become a member of the Florida Association of Mortgage Professionals. We want your membership. Look into one of the local chapters, get a hold of us here at the state level. We do some great advocacy efforts. You're going to learn a lot. You're going to grow a lot. We want you to participate. And, and if you want to have more discussion about it, depending on where you are in the state, on July 31st, our trade show and convention is coming up at the Hilton Bonnet Creek in Orlando. We'd love to see you, love to talk to you about it. But for all associations, wherever you're at, get involved with your association, get involved in some of the advocacy efforts. You're going to learn a lot. It's going to empower you.
Well, I can't make Nathaniel have me look bad by not talking about my own trade association, the National Association of Mortgage Brokers. Yes,
I said,
please,
get involved with all.
We're all good
since you've done
friends.
such a wonderful infomercial on FAMP, let me do one on NAMB. Obviously, we're all working on advocacy, legislative issues. We obviously are looking at all 50 states and territories, Puerto Rico, Guam, Virgin Islands, etc. But at the end of the day, the bottom line is we are a strong group of volunteers who are looking at best practices, advocacy efforts, ways to improve the home buying experience for consumers. And, for me, if you use NAM 50, all capitalized, you can save $50 off of an annual membership. It's only $100. So NAMB.org, please join.
I figured you'd be proud of me. Valerie is the past president of the FAP, so
I know, that's what I said. I can't make you have me look bad.
Well, before we close, let me throw a question out to all of you, which is basically, if you had a broker sitting in front of you and said, "Hey, Valerie, what can I do now that'll help me, related to insurance industry, to property insurance, what's going to help me get more business? What can I do today to help my borrower save money and maybe close that next loan?"
Well, as I said, I would look at creating your own ecosystem based off of connecting with an insurance agent, connecting with, a financial planner, a variety of referral sources, not just real estate agents, although real estate agents obviously are an excellent referral source. But I think we have driven home that there are other key components to the home buying experience, where it is just as critical to have a direct connection to be able to get information, especially information that is not readily available to the public. Not everything can be solved by Googling it. Google doesn't know the nuances of insurance coverage like an insurance agent would. So, whether that's, if you're in Florida, contacting Danny and his insurance company, or whatever other insurance company is in your area, make sure that you're making those appropriate connections, because you're really not just doing yourself a benefit, but you're really doing a benefit for your consumer.
Let me turn that over to the two of you as well. Danny and Nathaniel, you guys got any tips for brokers?
Yeah, I think exactly what Val said, and we do at Sihle, we do a lot of training to our real estate agents, our mortgage broker professionals. And it's really good because what we'll do is we'll ask the mortgage professionals to get all of the realtors together, and we will host it at our office, or we'll go to their office. And think of how impactful that is when they can get that training and understanding. And it's one of those things. You've got to be active. You've got to be pushing forward to make those connections and help out your consumers.
I would say that so first it was interest rates are really high, and that was a lot of noise out there. Then it was property values are too high. Now what I'm hearing wherever I go on my travel, oh my God, Florida, the insurance rates, right? Oh, insurance is so high. So now insurance has kind of stepped up. My recommendation is, other than what I addressed earlier, try to hold a lot of lunch and learns, try to get yourself empowered. I hate to use the term deflect because it's really not the word I'm looking for, but make sure that you are informing the consumers of all of the components of their payments, right? Use your tax estimators so they know what their taxes are going to look like. Go into the insurance component. Once you start to look at all these variables, the rate doesn't become as important anymore. It's the complexity in the whole payment, and reassuring your consumer that you're going to team up with them to help them find the best possible rate for insurance with the right coverage. The other thing I would recommend is start to do social media posts on insurance. There's a lot of people out there that are talking about insurance is so high right now. That's sort of like the big topic. Do some posts, team up with an insurance agent, get some content from them, talk about certain things people can do, use some successful examples of, hey, this home was purchased at this and not in a flood zone, and this is what insurance, talk about the aging of the roofs. Like, just get some information about insurance and start posting that out there, because insurance is more of a topic now.
Those are all great actionable items. Appreciate it. Okay, we haven't gotten any additional questions from the audience, so let me go ahead into the little wrap up and give people a couple more minutes if they want to think of some questions. Then we'll kind of wrap up here. So again, I want to thank our guests for joining us. It's critical that we do a lot of broker education, not just always talk about, here's the next way to close a loan. I mean, there's lots of ways you can close a loan, but trying to find ways to add value to their broker advisement to the borrower, beyond just getting in touch with a lender and finding out what the latest rates are. So we really look at ourselves as our partner with our brokers to help them grow their business. And we've got kind of 4 key points that we try to emphasize as a lender in working with us. Sorry, this is our commercial part now. But we've got a fairly streamlined loan process. So we've done everything we can to make it as easy as we can to deal with us or to work with us, whether it's paperwork, technology, or people. So we have spent a great deal of time revamping the website, our LOS, and we've got a few other things to help get the closing faster. We are constantly educating our brokers, sorry, not just our brokers, but our account executives and our sales team and our underwriters, so that we can always do whatever we can to get the borrower into the home. So again, we're calling it our can-do attitude. And as I mentioned earlier, our relationship with Imperial Fund and the sort of the capital markets and our ability to securitize, it really ties into the last 2 components, which is we have a very strong research department that is always checking everything happening in the industry, economics, you name it, so that we can start to develop loan solutions that are going to be the next step of what we think people are going to be needing. Typically, they'll be on the non-QM side. Obviously, Fannie and Freddie are, and the GSEs are a little tough, but we'll offer those products. And then we also have the ability to do very flexible underwriting when it comes to non-QM situations, so that we can accept the level of risk that we've talked about. In the short term, to help our brokers out until the end of the month, particularly those people in the Northeast, we've been expanding into the Northeast over the last couple of months. So we're offering a 37.5 basis points reduction for loans above 680 FICOs. So just to make it a little more attractive to get some attention out there. Give us a shot. You got a couple more days left for the holidays. And then we're going to continue with some more broker education. Beginning of each month, we always do a broker orientation, and that's for both people who've just been approved as partners with us, as well as existing partners, to just give them a little bit of a refresher. And then we're going to be doing, towards the end of June, a panel discussion. I'm not sorry, that one's not a panel discussion. We have a special guest who's going to be talking about AI again and how they can use it for marketing. So it'll be a mix of email marketing, social media marketing. So we're obviously big fans of AI to an extent. We have revamped our broker portal experience to include artificial intelligence components to it. So it's not something that's going to be going away anytime soon. So, somebody wants to start a fight. What's the best trade association, FAMP or NAM?
They're both great because we're all members of both. So very good.
And that is today's correct
And we've
answer.
all traveled.
Well, it is true. I mean, you have to look at both organizations. On a national level, the National Association of Mortgage Brokers does a lot, to handle things on a federal legislative level. At a local level, we have a lot of local events. So if you live in Florida, why wouldn't you want to be a member of the Florida Association of Mortgage Professionals? So, yeah, we're both great. Anything want to add to that? Val's the past president of the FAMP, so your turn to give us a commercial.
I'm a member of both. So as Nathaniel mentioned, I was president of Florida 3 times.
Yep.
So I'm a big advocate of FAMP, but we both have a mission of serving a similar community. FAMP, like Nathaniel said, if you're in Florida, become a member of FAMP, because a great part of communications, he'd mentioned a lot about lunch and learns. I think the best lunch and learns are those in person, because you have the networking aspect in it, that you can speak directly to your fellow mortgage brokers within your area. But obviously on a national perspective, we are focused on federal legislative activities, but we also monitor state activities, because sometimes what happens in a state can filter up to DC or vice versa. But state legislative generally happens much quicker than what's going to happen in Washington, DC. So you can effectuate change in your own state much sooner by being part of a state association. But obviously, federal rules and regulations are king. So it's important not to forget about those too. Great.
Well, that is going to conclude us for today. Let me make sure I tell people to scan the QR code if they have the opportunity, if they're not an existing partner with us, so they can start filling out a broker package and do some business with us today or tomorrow. With that, I want to thank Valerie and Nathaniel and Danny. There'll be a brief survey as you guys are checking out. It'll take about 2 minutes. Let us know how we did. And if there's any other additional topics that we may not have been thinking of for some future webinars, we'll be more than happy to consider them and present them and bring on, outstanding panelists like our guests today. So with that, I want to thank all of you. Wish you guys a good Memorial Day. Hopefully you have us finish with a strong May for all your closings and your origination volume for the rest of the brokers that are with us. So have a great day, and thanks for joining us, and see you guys in a few weeks.
Thank you so
Thank
much.
you,
Thanks for
Carl.
having us.
Appreciate
Thank
it.
you.
Yes, sir.
Thanks,
Thank you.
everybody.
Bye-bye.
Bye.